as we await all of those results, let's bring in our market panel. Vital Knowledge founder Adam Crisafulli and RBC Capital Markets head of U.S. equity strategy, Lori Calvasina. Great to have you both here. Adam, I'm going to start with you because I realize earnings are going to really pump up a notch here as the week unfolds. We also get a lot of economic data and all of this ahead of the election next week. What really seems to have moved the markets today was the move higher that we saw in yields in the Treasury market and everything that factored into that, including this fall in oil. It seems like Middle East and Japan, I guess, is the bottom line, that it was global dynamics feeding the U.S. markets.
Yeah, I think for today, investors saw over the weekend you had two macro developments that were received well on equities, one of which was the Israeli retaliatory strike against Iran, which was considered to be somewhat de-escalatory, and so oil saw a pretty steep decline. And then in Japan, there's the thought that the political turmoil there will make the BOJ proceed, and it will temper some of its hawkishness as it considers further tightening steps. So somewhat positive for U.S. equities, but neither issue was really, I think, the central concern for stocks, which is really U.S. yields, which have been moving up largely because of, I think, increased concerns around just some of the giant fiscal obstacles that are lurking on the 2025 calendar. And obviously next week's election will play a big role into kind of how some of those things unfold. You also had a couple of underwhelming auctions today that contribute to the move up in yields as well. So, you still have this dilemma. On the one hand, macro conditions right now are very favorable, resilient growth, disinflation, stimulus, and then relatively healthy earnings. But you have expensive stocks, and then you have this yield dynamic that's acting as a headwind as investors kind of really start to try to figure out what's driving yields up. If it's just data and inflation and concerns that the Fed will be easing at a slower pace than anticipated, then I think the move in yields is overdone and stocks can absorb that well. If this is concerns about ballooning deficits and debt and a lack of any type of real effort in Washington to tackle either of those, debt ceiling expiration, shutdown risk, all those things, if that's what's driving yields, then it's kind of a much bigger concern. And that's where we are right now. We've been moving sideways now for several weeks because of these two countervailing forces.
Yeah, it's a real wall of worry for investors to scale here. We have Cadence Design earnings out. We're going through those results, and we'll get them to you in just a moment. In the meantime, Lori, we've got, speaking of earnings, 5 of the 7 Magnificent 7 set to report this week. We know that of those names that are set to report jointly, they account for 23% of the S&P 500's weight. So what can we extract so far from earnings season, and how much now hinges on results we get in the coming days?
So thanks for having me. Look, I'm not going to lie. I didn't love the tone of the reporting season last week. I think the stats were all fine, but just not quite as good as what we'd seen in 2Q. We got deluged with industrial companies, and maybe I just read too many of those. But, things came out as, sort of pretty mixed. I think when we think about kind of these Mag 7 names that are coming out, they have 2 critical pieces of importance. One, just the health of the broader market, but 2, the health of the rotation trade. And that's where we continue to see a lot of investor interest. Those Mag 7 companies have been dominant on forward-looking earnings growth, but their dominance has been slipping just a little bit relative to the broader market. But the way I describe it in my meetings is I think the rest of the market, S&P X Mag 7, they're just not stepping up. They're just not seeing the kind of improvement in forward-looking earnings growth expectations that they need to see to really, have that rotation be smooth sailing going forward. So I'm really going to be looking for kind of the numerator and the denominator, how the Mag 7 earnings growth expectations are shifting and how the rest of the market, and whether the rest of the market, frankly, is able to, kind of start that process of catching up. So far, to be honest, they're kind of whiffing.